All right, welcome back everyone. Welcome back to another video. This one's going to be on market structure 2.0. The focus on this one is swings, pullbacks, and rotations. It's going to be leading on to topics that are introduced in market structure 101. So if you haven't watched that video, what I recommend doing is stopping now, going back and watching that one first. If you have watched that one, then I hope you're enjoying the content. Give a like on the video, subscribe if you haven't done so, and what we'll do is we'll move on from here. Okay, so just want to go through some take-home messages first. Just remember, like, price action and market structure is king. And then when I'm looking at like high time frames, like support resistance video levels, the daily is the ones that's more likely going to be breaking structure. Okay, so that's when I do use my high time frames. All time frames are important, but daily will really that'll really pinpoint levels that that structure will break. I'm using lower time frames, and this one's going to be more focused on the H1 time frame because that's when you're going to identify where you are in the move. It's going to be able to see, like, whenever you have like winning or losing trades, most of the time you're going to see that structure on the 1 hour time frame. Sometimes the 30-minute, but it does get a bit more noisy the lower the time frames that you go. So for this one, it's going to be nice and clean. It's going to be on the hour time frame. And what it's going to do is, like, you're going to be able to plan and identifying these time frames, these zones that we're looking at, understanding the moves is going to help you plan and prepare for the areas. Okay, and then understanding what kind of action you're going to take when you get to those. So with that said, let's go to the charts. So what I'm going to do is, this is just a blank background at the moment. I'm just going to illustrate the moves, like these ones over here on the right hand side, just so you understand exactly in a perfectly clean market what this is. And then we'll jump onto the charts, have a look at what this looks like in real time, and then I'm going to introduce, like, I'm going to show you like why this is so important, particularly for a lot of the traders that do that 180 phase changer strategy. Knowing this, you're going to be able to see that, okay, now I understand why that wasn't a good trade to take, and so on. Okay, so what we do, let me just bring this up. Okay, so when we have, I'm going to start with the first one. Okay, so this is, like I say, this is just the impulse leg. This is like your phase one, or the impulse leg. Yeah, we'll just say that. Okay, phase one. Okay, then you have phase two. Okay, so this would be your pullback, or your retracement, your correction movement. If it just moves back in one go, it's just a pullback. So what I'll do is, I'm just going to say this would be our starting point, okay, which is also our swing low. Then prices impulsed, then made a move up, and that would be our swing high. And then we've had a pullback. Okay, so this would just be a regular pullback. And from a pullback, when that pullback, the movement then goes and breaks the swing high, then this becomes your new swing low, and that was just a regular pullback. Now, sometimes the market doesn't just pull back cleanly. What it does is it comes back in waves like this. And at this point, this is where I see a lot of my students get stuck, because they think that this is now a market trending down. All this is a complex pullback. Okay, so it's a pullback making waves down until this level here has been broken. And what I mean by broken is, I mean like lower low, lower close candles closing underneath this level. Then until that happens, this is still an uptrend, because the market is making higher highs and higher lows. Okay, but this is, and so just to understand, this is a complex pullback. From a complex pullback, once price gets down, yeah, if it just breaches again your new swing high, okay, then you'd move that. This would be your main pullback area, like your swing low. Let's just move this one out of the way. Then the market's, everything's still good. The market is still trending up. When I say, if price does come back down here and close lower than your recent swing low, okay, the most recent swing low. So if this was your most recent swing low, I'd be removing this, and then this would be my new swing low. So then once price closes underneath here, and like closing, like if this is that line, okay, if you get some bearish candles coming down, if we just have a candle that creates like a wick, that's just a lower low. Okay, it's a lower low, but it hasn't closed lower. If you get a candle then that closes lower, then I would say that this swing low has been broken. We can, at this time, we can get fake out candles. We can get candles that will make a fake out, but that I'll cover that in a different topic. A fake out would look something like that. Okay, but let's just say that this is, once you've got a candle that closes lower, then what this is a bearish rotation. Okay, this is a bearish rotation leg. It doesn't mean the trend has changed. All it means is that you need to watch out because we have had the most recent swing low broken, and that now the structure has changed. The only way to get a confirmed trend is when you have, so once we have a okay, we've got a bearish rotation. This would become a swing low, and then you'll be moving your swing high. This is the most recent swing high. Now we've made a lower swing, a swing low. The only way to get a confirmed trend is when we have a second lower high, okay, a second swing low, sorry, a second swing high, second lower swing high, and then a second lower swing low, okay. Once we have something like this, now only then would have a confirmed trend. And you can say that the market is now trending down because the overall trend was broken. Okay, so that would move that. If then you have, what a bullish rotation is just the opposite of this. So you would have that this would be your market's trending down. If we'd have that from your most recent swing low, and then we have price break and close above the most recent swing high. So let me just remove this one, and then create a new swing high. Then this would be called a bullish rotation. So it's just something to watch for. Okay, this is the terminology. We expect market to trend until you get to like a pre-known destination, like a higher time frame resistance, where market will react from and break the trend. Okay, so what I'm going to do is I'm going to go to the charts, and then we'll just see how this looks, because market never is perfectly clean. Okay, so when we make a starting point, whenever we have a starting point, it's always from a bullish rotation or a bearish rotation. Okay, so whenever you've got like market doing something like this, it's either going to be, that will become now your starting point once we've broken the most recent swing high, swing low, or when we've broken the most recent swing high. Okay, either the swing low or the swing high. So what that's going to be is going to be on the left hand side of your charts. So you can see that price had gone down, and we had this like little consolidation. So this would be your swing high, and then this is your next swing high. Okay, then price has come down, made a swing low. When price has broken your most recent swing high, or if you want to go like this one, that's the bigger leg. It's the bigger leg. This leg is now bigger than this leg. Okay, maybe phase one, phase two, phase one. Now this leg is much bigger than the most recent leg. So this is a bullish rotation, and a bullish rotation is going to be now your starting point. And then we just watch and see how price is trending. Okay, so then you'd see this is one leg, then we've come down. Okay, so then it's made just a regular pullback. This would just be a regular pullback, because from here now we've gone and we've closed higher than this level. So this is just a regular pullback. Prices come back down and it hasn't closed below. Okay, so this is why it's so important to see if the candles close below. What we have done, I'll just remove that so you can see it, and I'll just draw, let me just move this box. Okay, so you can see that this is that little level. You can see that we never see the lower the wick. Let me just zoom in on this. Okay, you can see that the wick is here. So I'll put this box on the lower end of the wick. You can see that the candles never closed lower. Okay, they went lower, they made a lower low, but they never closed lower. So this is just your regular pullback. Okay, prices come back up. So this is now your, let me just zoom out, I'll make a new swing high. Your new swing high, prices come down, wicks lower, like send its little wicks lower, but never close lower. That's still your swing low. And because the actual market structure is still intact, then the trend is still up, because now you've got a confirmed trend. You've got a starting point, you've made a swing high, you've made a swing low, you've made a second swing high. So trend is now, you've got a confirmed trend. Prices come down, and it's made a double bottom, never broke it. Okay, so this is good. Okay, now we've gone up and we've made a new swing high, because it's closed higher than this bit. So new swing high, and then now if we extend this out, you can see that you've got these wicks to the bottom. The trend is still up, because this isn't your most recent swing low. The trend is still up until the candles close below it. Okay, so if I put it on the bottom of those wicks, you can see that these candles never close lower. Trend is still up, but because this doesn't look like a clean pullback, so this one's a complex pullback, and this is where people get stuck, is because you'll be thinking that once we've made a phase one, the people will read it like this: there'll be a phase one, phase two, phase one. Now we've got a confirmed trend to the downside. But we haven't. All we've done is made a complex pullback. This phase two movement is complex. You know, it's just not a simple one. But the key level was this gold shaded box, because we never closed lower than our most recent swing low. Okay, so we should only be thinking bullish, buys. Okay, then price has continued, because we are trending up. Made a new swing high, come back down, come back up, then we made a new swing low. Okay, then we've closed higher than these wicks, so that's your new swing high, and then your new swing low, and your new swing high, and your new swing low, and so on, so on, so on. Okay, so you can see now that like price had been trending from our starting point down here. I'll just zoom out a little bit. Okay. Now what we're going to do is, so this was just a clean pullback. This one was a clean pullback. It's like a consolidated, but it didn't come back in this like sort of 3-leg move, or it can be like a 5-leg move, a 7-leg move. Doesn't matter how many legs that this retraces like here. It doesn't matter until it closes lower than this little level. Okay, so price continues. We've got a most recent swing high, most recent swing low, and then it continued again. Closed higher, just a little bit higher than this level. So that's your new swing high. Okay, at this stage we're hitting higher time frame resistance. So this is like a predetermined level, I'm basing this on the daily. And that when you get to these levels, it gets a little bit tricky then, because then you're going to be thinking, well, we'll get to a level of resistance, and this can potentially break structure. So I'll show you on the daily. I'll show you on the daily just the level that I was looking at. Okay, so you can see over here that it's this one. This one here, you can see resistance, price sort of tried to go up and fell back right down. So this is like a fake out. Price came up again, went above, and then came back down. I'm going to touch on like close and establishing in a different video, but this is a key level, because you've got 1 touch, 2 touch, 3 touches, 4 touches. So this is pretty sensitive. So if we go over to the right hand side, you can see where price currently is. This wick here, so this was on 1st of Feb. If you go back to the 1 hour, this happening here. You can see 1st of Feb down the bottom scale. This is that price hitting that daily resistance. Okay, we need to look at our most recent swing low, because now this is our most recent swing low. And you can see I've put in this box on the lower edge of the wicks. Okay, now let's just zoom in. You can see price makes its pullback. It makes a double bottom originally. Okay, comes up, comes down, causes this double bottom, has a little bounce up, and then what it's done is actually closes lower. It closes lower, and it breaks this swing low. So now this leg, originally, until it broke that, it was just a pullback. It was just a regular pullback. But now that it closed lower, this is now a bearish rotation. So let's just grab this guy, put him up there. Okay, I'll zoom in. And just bring the scale over here so it's still there. Okay. Okay, so now we've got a bearish rotation, and now we haven't got a confirmed trend. At the moment, it looks like a bit rangy, but what we need to be careful that this is, something significant has happened, that now we've got a break in actual structure because we've closed lower. Price then, so this will become like the new starting point, yeah? Because we have a starting point from rotations, from bearish rotation or bullish rotation. Okay, price has done this little thing, okay, but once we broke lower, looking at this like a bearish rotation, price comes back up and makes a lower high. So now we've got a swing low. This became our swing low high, and now this becomes our new swing high. Once then, from the swing high, if we break the most recent swing low, now we've got a confirmed trend to the downside, coming off of higher time frame resistance. Okay, price comes back and makes a regular pullback into our most recent swing high. Okay, most recent swing high. And you can see how these little levels now become quite important. Like this is like where it clusters, it consolidates for a bit. They become pretty nice levels to trade off. You can see it's sort of like this. This was a cluster. Price came down, came up, and that reacted off that level at the start and came back up. So they all become like all these levels are going to be potential supports. Support. You need to be careful of them on the way back down, but looking at overall structure, when we've got this bit happening, now you're saying that you've got a confirmed trend on the hour to the downside coming off higher time frame resistance. Price pulls back, makes a regular, or this actually a pretty complex pullback. Yeah, it's like a complex pullback into this zone where our last swing high was. Then what we do, we don't quite make a double bottom. I mean, we do make a double bottom. We don't make a lower low, lower close. So this is just making a double bottom at the moment. So price is just ranging at this stage, but we are in a downward trend. We're just in this bigger range. Price continues going sideways until eventually it breaks lower. Once it breaks lower, you can still map out your swing lows. Okay, your swing lows, most recent swing high, and then we ranged, and then we had, once we broke lower, where the move started from like you got two swing highs. Okay, you've got a swing high, this is your one swing high, or this swing high. They're both swing highs. Now, which one is going to be stronger? Like obviously this one is going to be stronger, but then this one is closer to price. So it is subjective which one you're going to use as your most recent swing high. I would be using this one just because these are pretty clearly defined. Okay, most recent swing high. This becomes your most recent swing low. Okay. This here, now this is where you need to be careful because this is Bank of England news. So higher time frame resistance, big news events can break structure. Okay, so you can see, but focus on this moves at the start where you've got, you know, where it was trending quite nicely. It was trending nicely until it hits higher time frame resistance. That breaks structure. Then we started trending quite nicely to the downside. Okay. And then we hit, you'd have to treat this as like, you know, high time frame support or resistance or high impact news, because then that just completely breaks structure. Now, why is this all important? Why is it important? Because it's going to impact, like when you're looking for trades, you can trade off these zones, these consolidation zones, because you're coming from high time frame resistance, you've got a consolidation zone, it's trending, you've made a lower low, price pulls back, and you can look for opportunities to sell from these levels. Or now putting this all together, if you're going to be trading this 180 phase change, let's have a look at what the winning trades and the losing trades will look like. Okay, so let's just move some of this stuff out of the way. Let me just delete these things actually. Okay, I'll just put an indicator up the top here just to keep price pushed down because it does help with the scaling. Okay, so what I'm going to do is like we can see in this on the 4-hour chart. It's going to put a vertical line on. Okay, this is our most recent signal that worked out. Okay, when it was. Let's just go back. Let's just go back to here. Okay, this is a signal. Good signal, ends up winning. Okay, yep. So then we can look on the H1. Okay, you can see if we put that in play now, we've got. This was that. Remember this level here. This was our most recent leg up. This was our bullish rotation. Okay, so we've got bullish rotation. Price comes down, comes up, makes a new high, comes down, comes up, makes a new high. Market is trending. Market's trending until we close lower than this level. Where your trade was, you were in an uptrend. You were taking a buy when the market, even though it had this little complex pullback, it was still trending from this level. Because this was your most recent swing low right here. Price pushed up. And then this was fine. This was a good trade. Go to the next signal. Next signal is over here. Okay. We look on our 4-hour chart, on our 1-hour chart. You can see price was still trending at this stage. Okay, we're still trending. Still making higher swing lows and higher swing highs. Take the signal and then this one works out. Then we go to the next signal. Okay, next signal to this one. And then this one would have been a losing trade. If we look at it, what did we notice on this? Remember when we actually looked at all this, let me just put this back on. Because we had, you can see, let me just, okay, so vertical line. It should pop up just because I changed the template. Now I removed it. Okay, so we go, that was our last signal. Price had broken our most recent swing low. Remember our last swing low was over here. So let's move that swing low. most recent swing high. Okay, so now we've got a bearish rotation happening because this had broken the low. So when you're getting into that trade, you're trading after a bearish rotation, which is risky because after you've had a bearish rotation, you're going to have all these other levels that resistance is going to become a bit stronger. Okay, this level, but this was also a consolidation. Remember I say that consolidation areas are good levels to trade off. You've got a consolidation zone where they've got a lot of candles. Okay, you're trading into it. So if I'm going to look at this and look at price action, I'm going to see consolidation, like all these little candles. They're living in this sort of area. Okay, we've got like this is like the area. Then we've got an impulsive candle breaking out of that zone. So there's a lot of momentum coming out of this zone, and then it ended up having enough to break the last swing low. So when price comes back up, where you're actually entering into your phase change signal on the 4 hour, everything looks good on the 4 hour, but on the 1 hour, it makes a lot more sense. You tap into this resistance pretty much perfectly, and then price goes south because and it's confirming the trend to the downside. If you don't pay attention to this, and we just thought, okay, it's just a losing trade, price sets up again, gives you another signal, and then you end up trying to take this one as well. We go back over to here. You can see this vertical line would be where you're actually entering into the trade. Now price is got a confirmed trend. So you're buying into a confirmed trend. Okay, where that next consolidation, and the next consolidation down is here. This is your entry, and you're entering. You're gonna find it really gonna be always losing if we're going to be buying in a downtrend, because it's confirmed. The price is telling you in the lower time frame what's actually happening. Okay, so let's move on to the next one. Let's go back to our 4 hour chart. Next signal over here. Move that line. And this is how I backtest as well. How you backtest, how you understand how price moves. Okay, where you're entering this vertical line, you can see that we're still in that downtrend. You know, price is trending down on the lower time frame. Back into this consolidation area, which is these are good levels to sell from. So always ask yourself, when you take a losing trade, it means that someone else won on that trade. So what could you have seen in these charts that you could have actually taken a different approach and be selling instead of where you were buying? You were buying into a downtrend, into a consolidation area. Other people will be looking at this and then seeing that you've got, even if you started here, you could say this was a bullish rotation, bearish rotation, okay, swing high, swing low, lower swing high, price comes down. It comes down at least to make a double bottom, but you're making lower swing highs. These are the trades when you're looking at phase changer. You should be looking on your lower time frame to see what is the structure, because you can avoid these losses. Other little things that I see is the EMA is starting to flatten out. If you wanted to go by EMA, this is delayed, but this is already telling you, price is sort of losing momentum. It's not trending up like it used to. Now it's going sideways to down. So price has changed. On the hour, you can see the actual structure has changed. Okay, so I'm going to leave that there. This one was just focusing on swing highs, swing lows, complex pullbacks, bearish rotations, and bullish rotations. If you like the video, give it a like, subscribe, and I'll see you at the next video. Thank you. Bye-bye.